All right, everybody. So what we're looking at today is my TNK trade. As always, I will put screenshots of the chat room. I do that whenever possible, just so you guys know that I actually did take this trade where I said I took this trade. But let's get right into it because this one's a very easy one, very simple, and it's an easy winner. And it's something that you should have in your repertoire. Am I using that word correctly? I guess your playbook of potential trades. This is a good one. And basically what it is a simple retracement. Or a retest, excuse me. It's a simple retest and then a continuation. That's pretty much what this is. So we're looking at TNK. We're looking at the day chart. That means each one of these candlesticks is a day. Now, as you guys know, I am mostly a swing trader. I do day trade here and there, and I teach day trading. I'm actually a decent day trader, but I really prefer swing trading. But this is one of those things that you can actually use pretty effectively in day trading. Now, the exact concept is the same, just the time frame is different. So if you're more like inclined to want to day trade, this is actually a good setup to know even for you because it just works. It really just works. The risk to reward is really where it should be, and it's just a good play. So what we're looking at is we're looking at TNK. We're looking at it on the daily, and basically what I took is pretty much where this blue line is. So this is a mistrade right here. So first we need to know what's going on. So this trade here, I guess you could say, in a sense, a little bit of a triangle pattern. In reality, we'll keep it simple. And this is just a level of pure support. This is a good level of support. Every single time it came here, it bounced, bounced, bounced. Unfortunately, right around here, I miss this trade, but that's okay because a lot of times the market is generous if we know what we're doing, right? The market can be very greedy if we don't know what we're doing, and can actually be very generous if we know what we're doing. So no big deal. I saw this move down, and then I saw this come up for the retrace, or excuse me, the retest. And this is where I took the trade right here. I will put those screenshots right now. This was 2 days ago, the 26th of February, 2018. So took it right here, retested this zone right here. Came down, retested, and moved down. Very simple trade, a very profitable trade. This is like a 10-cent mover from where I got in, 10, 11-cent mover from where I got in. Now, just to put that in perspective, on $1,000, that's $100 in a couple days. On $5,000, that's $500. On $10,000, that's $1,000 in just a couple of days. And the beauty of this trade is because it is in such an area or location, or this is a setup where your risk to reward is literally beautiful. Your risk to reward is perfect. Very small risk. You can put your stop losses literally like right here, which is pretty much where I did. I put them above 30. I believe at 131 actually, 131. And if this would have gone against me, it would have been about a 5-cent loss. We're already in a 10-cent win. So in a sense, it's already a 1 to 2 risk to reward. I could totally see this getting down easily. So I'm going to make this green. What do we always say, you guys? When we are short, green is actually our stop loss, right? Because we buy to cover. The only reason why I do that is because I want to kind of ingrain in your heads that you're pretty much, when you're short selling, you're doing something in the opposite order. You're selling first, then buying. So your stop out is actually a buy, and your take profits, I can see this easily going down to here. It already got to 115 and pushed all the way till the end of the day. I could see this easily getting to 112, really down to 110, potentially down to 108. We could retest that level down there. Either way, any of this is at least a 1 to 2 winner. This could very well be a 1 to 3 winner, with really no hassle at all. Now, people might say, well, that's a 10-cent move. That's nothing. Yes, but you have to think of it in relation to the price of the stock. The price of the stock, this is a dollar stock. So it's the same thing as a $100 stock moving $15, right? A 10, 15-cent winner on a dollar stock is the same thing as a $100 stock moving $10 or $15. It's exactly the same. So that's how you have to think of it. You have to think of it in percentage returns and then convert that into a dollar amount based on your position size. So very simple trade. Stupid simple. And in reality, that's the trades that I like. I like stupid simple trades with good risk to rewards that just work. And the reason why this works is very simple. This stock has been downtrending. All right. So you follow the trend. A lot of people trend or counter trend trade, which is fine. You could have counter trend traded right here at the double bottom. But you have to understand the moves are going to be smaller, right? By definition, a trend in one direction means that it moves more in one direction than the other. It still moves in both directions, but over time it moves in one direction more than the other direction. If not, you couldn't trend up or down. So if you're trending down, all the up moves on average are going to be shorter than all the down moves. Only makes sense. So when you're looking for a counter trend trade like you could have here, you have to understand this move here is not going to be as drastic. Now this would have been perfect because you literally could have probably had a couple of cents for your stop loss, and you could have taken maybe a, what do we got here? We have 130. At the most, you'd probably take profits at 143. Really, you're probably looking for profits here because you're expecting a lower low. So you're probably putting profits like 138, really anywhere under 140. So still, that is a 10-cent move for a 2-cent potential loss or a 3-cent potential loss if you want to be safe. It's still 3-to-1 risk to reward. That's great, but the moves are smaller. Just like if you looked at the move up here, which is kind of a double top, not really, but that'd be 143 to 108, or even right here, 130 to 108. And this is the mistrade that I missed. This would have been a good entry right here, right around 130, maybe 127. So that is a 17, 18 cent move. All right, so the moves down are going to be obviously longer than the moves up if a stock is trending downward. Took the retrade or the retest, entered at the retest, and then moved down. Very simple trade. I'm not gonna overcomplicate it. In your trading, don't fucking overcomplicate stuff. Really, honestly, when you're out there and you're trading, you're gonna realize that when it comes to the actual strategy that you're using, don't overcomplicate it. If you're going to have anything at all that's complicated, make it your risk management strategy. Make sure that your risk management strategy is up to par and that is really stellar, because the actual strategy that you're trading, not a big deal. Your risk management, much more important. Keep your strategy simple, your risk management beast, and then work on other things. Like we talk about, everywhere here at Finance and Chocolate is centered around, everything I do here is centered around risk management and is centered around a proper trading strategy. And really, of course, you're going to need to know the other stuff, right? You're going to need to know your trading statistics. You're going to need to know your trading ratios. You're going to need to know psychology. You're going to need to know actually how to do all these things. You're going to need to know how to develop a strategy, so strategy development and strategy testing. All that is very important. Your statistics, so a little bit of math that's involved in trading. Nothing too crazy. Don't get scared off. Math is not crazy in trading, but some of the basics are important, and I do teach that here at the Trading Mastery Bundle. But anywhere, literally anything that I do here at Finance and Chocolate relates to risk, and we look at it from an angle of risk first, profit second. And if you want to actually learn how to trade properly and you want to trade for the long term, you have to understand that risk first, profit second has to be the mentality. Because if you're always shooting for that home run and you don't give a shit about risk, yeah, you might make a lot of money. And then what you're going to do is you're going to lose a lot of money plus more. And the reason is because your risk management is out of whack. So risk first, profit second. That has to be the mentality. That has to be the way you think if you're going to trade successfully for longer than just a couple of months without blowing up your account. So everything we do here is centered around that. And everything I teach here is centered around that. So hopefully this was informative. Seriously, a super simple trade. Does not have to be more complicated than it needs to be, and this is an easy. I like to talk in percentages because I know everybody has a different sized account. But just to put it in perspective, on $1,000, this is like about $100 winner so far. We're gonna push down into here, and it should easily be, if we can get down there, it should be easily maybe like a $200 winner. That's on a tiny position. That's like a 20-30% move. So that's something that you can make on $1,000 on a $1,000 trade. That's pretty impressive. And these small stocks exist. Now, be very careful. All right, be very careful when it comes to the difference between a penny stock and a low price stock. This is a low priced stock. All right, but I would not necessarily consider this a penny stock. And the reason is because in my book, a penny stock not only is cheap, but is also extremely volatile. All right, and liquidity is terrible. So what you end up seeing is gaps. Right? You end up seeing things like that. You end up seeing huge gaps, huge spikes, which this one does have. This has a big spike here, but you'll see like intraday spikes of like 30-40%. And that's a little bit dangerous because it's just risky, and you can get one of these huge spikes. And if you don't have the proper risk management, you'll get screwed. So even at this though, even this spike here, if you took it short, let's say you came here and you took it short right here, as long as you had proper risk management, this spike took 3-4 days to actually complete. So unless you're just holding the bag, which is a mental thing, that's something when you have to work on psychology. Unless you're just holding the bag, you would be okay, even with a spike like this. The spikes up here, they take multiple days. In true tiny penny stocks, spikes can happen in like a couple of hours to a day, maybe 2 days. So just be careful with that. Understand the differences and understand that something like this, I actually believe this is even trading. Yeah, this is trading on the NYSE. So this is not even trading over the counter. So it's approaching penny stock territory just because it's obviously a downtrender, and excuse my French, but it's a piece of shit. We don't want to go against the trend. It's that simple. If it's a piece of shit, short it. Don't overcomplicate things. If it's a piece of shit, short it. I mean, don't overcomplicate your strategy. But not necessarily a true penny stock, and I want you guys to make that distinction because I don't think, especially if you're new to the markets, I don't think penny stocks are where you should start. Yes, the profit potential is huge, but so is the loss potential. And when you look at it from a financial perspective, and you actually look at risk versus reward, which risk would be your standard deviation, right? And reward would be your expected return, which is the mean or the average expected return. When you look at that, you actually have an average expected return that is negative, and you have a standard deviation, which is your risk, which is actually very high in penny stocks. So from a financial standpoint, what you end up having, and I'm talking on the long side, if you short penny stocks, that's different because most of them go down. You just have to be careful with the spikes. But when you look at it from a financial perspective, and you just take penny stocks as a general whole, as one giant pile, and you look at it from a financial point of view, what you notice is that you're taking a lot of risk, which is standard deviation, for not that much return or even negative return over the whole pile of penny stocks. So you might actually be taking a ton of standard deviation, a ton of risk, or have a large standard deviation in your potential returns, and you're going to be taking a negative expected return when it comes to profit. So understand something, that if you look at it from finance, risk and standard deviation are the same thing, all right? And average profit or overall profitability over the long term and average expected return are the same thing. So you have to compare those two. And finance tells us, right, that the more risky something is, the more return we should require in order to partake in that investment. So just be careful when it comes to that. I'm not against penny stocks. I just think for the newbie, it's a place that you have to be very, very careful with. And you probably want to start with potentially stocks that are low priced, maybe $5 to $15. I always suggest $3 to $15 because those, you still get large moves. You can still get $2, $3 moves, but they're not as crazy volatile as pure penny stocks that are 10, 15, 20 cents. So just remember that. Remember that you're after profitability, you're after percentage return. And if a $5 stock moves to $10, it's the same thing as a 10-cent stock moving to 20 cents. So don't focus so much on the dollar amount of the stock. I know a lot of people get drawn into penny stocks because they see this small amount, right? They see, oh, 10 cents, that's so cheap, I can buy a ton of them. Well, let's say you have a $1,000 account. Yeah, you can buy 10,000 shares, right? But at the same time, if you took a $5 stock with a $1,000 account, you could only buy 200 shares. But if the penny stock goes from 10 cents to 20 cents, you double your money, right? If the larger stock that costs $5 goes from $5 to $10, you still double your money even though you're holding less shares. So don't necessarily look at it like that. Look at it from a percentage return point of view and make sure that you're after percentage gains as your core mentality in trading. So hopefully that was helpful. I know I went off a little bit of a tangent just because there's not really much to talk about on this trade. It's an easy trade, easy winner, and a good winner. So hopefully that was helpful. My name is Derek. I am the owner and founder of Finance and Chocolate. Hopefully this video was helpful, and make sure to check out the content on the website. There's tons and tons of good quality content on financeandchocolate.com. And if you want to join the team, there is awesome awesome stuff that we do on the team. We trade together, and we have truly built a community of dedicated, highly skilled traders. I have traders in there who are, I would consider, experts, and I have traders in there who are newbies or who are beginners. And what's nice is you have this mix, and you can see what the expert traders are doing, like myself and like a few of my other members who are truly good at trading. And then you can kind of see also where the beginners are. And it's just a nice place to be because you can ask questions. We're all very friendly in there, and myself, I'm very friendly in the trading chat room as well. And like we always say, 100 eyes on the market is better than a single pair of eyes. And what we do kind of in there is, I don't call it an alert service or a signal service because it is not. Is 100% not that. But what it is it's an idea generation place. So we have an actual channel in the chat room that is purely for potential trade setups. So anybody, any member, new or expert, can post their ideas in there, and then basically the team can give feedback on that idea and can say, yeah, that's a good trade. Maybe I'm going to take that trade, or they can say, maybe not that trade, and this is the reasons why. And it's just a great place to get feedback. So with that said, hopefully this was informative. Like I said, my name is Derek. I can't wait to see you in the next video. Definitely head over to financeandchocolate.com and check out some of the content on there. All right, I will see you in the next one.